What's up, IT friends? Today, we're going to clear something up that I see frequently being confused, mislabeled, and therefore leading to constant debates. Just what the fuck are billable hours? If you're new to the MSP space, we're a for-profit IT industry. Assuming you already knew that, we have this word that we use within the MSP industry to refer to time, and we tend to call them billable hours. Now, this comes from a general concept that in a for-profit service-based company, not necessarily an MSP, your time is either your inventory or a component of your inventory, and therefore, any time that is spent doing something has to be billed somewhere. And I think from a lemonade stand accounting standpoint, everybody understands that concept. I was any other professional service, a carpenter, an artist, a mechanic, a lawyer, a doctor. We all understand that if I spend an hour of my time helping you, that's an hour I couldn't help someone else. Therefore, I must account for that hour by billing you. Unfortunately, that's about the totality of the explanation and understanding that seems to get propagated around our industry. And it's not that it's incorrect, but it's leaving out a lot of information that leads to a real lack of clarity, especially when we implement metrics or policies that we either haven't explained to our staff or maybe don't really know what those metrics or policies mean and just kind of implement them. I have a video on this, by the way, talking about utilization. To clear some of that up, let's define what billable hours means, why it's different from invoiceable hours, and why, yes, I'm sorry, but people on the internet who have told you that almost all your time should be billable, they're right. And if you disagree with that, unfortunately, from an accounting standpoint, you're wrong. If we accept the premise for a moment, like we talked about a second ago, that at an MSP, our primary inventory item is time. And let's assume you have at least one employee. Every day you buy 8 hours of time from that employee and you try to resell all 8 of those hours by billing them somewhere. Any hours that are not billed at the end of the day, if we think of this as literal inventory, go in the dumpster. The example I used to give employees back in the day around this concept, imagine you worked for a computer store. Every day that computer store bought 8 computers. At the end of the day, any computers they were not able to sell that day, they threw in the trash. How long would you want to work for a company that managed their inventory like that? Right, and the answer is, of course, well, not very long at all, because they're going to run out of money and they're not going to pay me. That's not a good business. So if we accept this premise that time is our inventory, the very first thing we have to understand to clear up this myth about billability, billable hours, is that billable in terms of an accounting principle does not mean invoiceable. And I think that's where a lot of us get tripped up first. At your MSP, 100% of the time that you are paid for, which is typically 8 hours, has to be cost accounted for against something. It has to be billed against something. That does not mean that 100% of your time needs to be directly invoiceable to the client. Well, let's use a different analogy. Let's say we own a restaurant, and in that restaurant, all we do is make salads. If you come in and you buy a salad from me for, I don't know, what's a fair price for a salad? $16. You buy a salad for $16 from me. Obviously, you're paying for the lettuce, tomatoes, whatever, the package it's in, you know that. But you also are paying me for the prep time, the materials, you're paying me for a little bit percentage of the rent for the building, the electricity, everything that went into it. We all generally understand that idea, right? If I am the bookkeeper for this restaurant that makes salads, no matter what price the owner decides to charge you for that salad, whether it's $16, $2, $100, or $0, I still need to account for the cost of everything that went into preparing that salad. So from this standpoint, the cost to get to the point of sale where I hand you the salad is crowbar separate from the price you pay me. And that's really important for a moment to separate that for a second. It doesn't matter if I give away every salad every day or if I invoice you and charge your credit card for the salad. It is irrelevant. I, from an accounting standpoint, must still go in and tally up what was spent to produce that salad and make it available for you to consume it, regardless of what I charge you. Everything that goes up to that, regardless of what I charge you, that is what we mean when we talk about billable hours. Because within that time, so the things I listed there, the ingredients, the prep time, the kitchen itself, the electricity, some of those things are considered to be operating expenses. And from an accounting standpoint, cannot go against my customer conversion rates, the amount of people who are coming in and paying me. It does not sit against them. I am not directly offsetting that in how much I choose to mark up the salad. Those operating expenses, electricity, utilities, rent, those are not considered to be cost of goods sold. And as a result, those things don't necessarily get billed to the same account in a general ledger. Everything else, the ingredients, the labor from the chef making it, maybe the package the salad comes in, any tools that are directly required to present you a servable salad, all of those things likely are cost of goods sold, like our time inventory example earlier. They're inventory. And as a result, that inventory has a discrete and fixed cost I need to track, because since it's a for-profit business, I need to figure out a pricing model where I mark up those costs of goods sold to arrive at a fair price. All of that ends up meaning that if I don't record all of those cost of goods sold items, so in my salad example, it's everything we listed, the materials, the labor, I will not accurately be able to have any idea of how much money I'm making. I can't actually, and it's not a matter of money I'm making as an owner, I'm rich, I'm buying a yacht. I mean, literally from an accounting standpoint, I cannot balance the sheet to figure out what the fuck's going on. That's what we mean by billable in MSP land. At your MSP, you work out of a PSA or a ticketing system. That system is different than an enterprise ticketing system like Jira or Salesforce, maybe ServiceNow, because a PSA combines a ticketing system with an accounting system and a CRM and puts it all together so that you can basically have that cost tracking from the minute your inventory is entered in, which is time, to the end. That means that I need to account for and track 100% of that inventory. When you see that an MSP is claiming that we need to have 100% of your time accounted for, that's what that actually means. A lot of people, even business owners, don't understand that. So they parrot that idea to you, and it can get misappropriated, misrepresented, and sometimes set up in a way that is ridiculous, where you're being asked to fill 8 hours end to end with tickets, which is impossible. But what it's supposed to mean is that I need all 8 of those inventory hours recorded somewhere. If we go back to the very beginning where I said that computer example of if I bought 8 computers and then I threw away the ones I didn't sell, all I'm saying by 100% accountability is at the end of the day, I need to know where all 8 computers went. If 5 of them were sold and then 3 of them went in the dumpster, I need a sheet that says 5 were sold, 3 were thrown away. I just need 8, started with 8, ended with 8. That's 100% of your time being entered. The billability then comes into, well, I want to have as many of those hours sold because I'm running a business. So my computers, I would like more of those computers to be sold than thrown away. Just like I would like more of your time to be billable than thrown away. We're still not talking about invoiceable. What I'm saying here is I want a percentage of your time, and a common metric is somewhere between 70 to 80% of your time for the entire day to have been allocated to cost of goods sold, to time that can be billed against something. This does not mean I'm invoicing a client for it. And it may not actually mean that the time code you're using is labeled as being chargeable. We're not talking about that. Internally, from an accounting standpoint, I need to know that the bulk of your time is being put into service of delivering the goods we are selling. If this were my restaurant again, that means I need the majority of the chef's day to be in service of things that will produce that salad. I don't want the chef cleaning tables, because if they're spending most of the day cleaning tables, they are not spending that time making a salad. And I sell salads, not clean tables. Clean tables are a part of having a restaurant. They're an operating expense, but they are not part of the salad. And that chef should be spending most of their time working on making the salad. And in this, you are the chef. There are certainly roles in any company that are administrative, that are only an expense, that are not part of the cost of goods sold. Bookkeeping, sales, typically, sales and marketing, all the benefit shit, all the back office stuff, all of that is typically admin stuff. Because of an MSP, our inventory is time. There is generally a concept, and your PSA was built to do this, where the assumption is all of that, cost of goods sold or administrative, does have some general ledger account it should be accounted against. Hence the term billable hours. Now, if you're hearing this, it probably, if you're following me, it should occur to you, well, then unless I'm in a model of MSP where we directly invoice for every interaction, so break fix or time and materials, unless I'm in a time and materials or break fix style MSP, how is that my problem as an employee? And you, my friends, have stumbled into, I think, where this becomes really confusing for our industry. So the short answer is it kind of isn't. The longer answer is a little more complicated, but as an employee, your job really is simply to account for 100% of your day and to do so as accurately as you can. As to how much of that is or is not billable or potentially invoiceable, technically really shouldn't be your purview. Just like the chef shouldn't be worrying about if this salad is being comped for free or if this salad is going to be $16. They just are supposed to prepare amazing salads and account for their ingredients on their ticket for the salad. That's someone else's job to decide the price and charge for it. And really, that is how it's supposed to work at your MSP. And if your PSA is set up properly, you're going to find that you, as an employee, should not really be having to make a lot of decisions about what time is or isn't flagged as billable or not billable. That should all pretty much be simplified and decided for you. But that would require that when your PSA was set up, the owner of your business understood all of this, which they very likely may not have, and they knew how to implement it in your PSA, which they very likely may not have. And so we have this situation where your tool set has drifted from what you're actually supposed to be doing. You probably haven't had this concept explained to you properly, and you likely have a manager or an owner who has parroted an industry statistic or KPI they've been told is best in class without really understanding how it works. And that arrives in this weird area where we start to confuse invoicing a client with the concept of billability. To give you some perspective, if I said I wanted you to have a 76% billability rate for the day, meaning that 76% of your 8 hours for the day should be time that I can account for as cost of goods sold, whether I invoice someone or not. So if I'm profitable or not, I don't care about that right now. That's a me problem, not a you problem. Just simply, I want you to record at least 6.8 hours of your day into the ticketing system as a type of time that is cost of goods sold. Out of those 8 computers we bought, I want you to, sell 6 of them during the day and only throw away 2 of them. Well, if you think about it, out of an 8-hour day, and this 8-hour day, that's not including your lunch or any breaks, it's just the actual time you're supposed to be working. That's only 6 hours out of 8 hours that I'm expecting a general best-in-class metric that you're entering in as time facing a client. That leaves 2 hours where you are doing other things. Those things could be productive. It could be a meeting, could be training. Those things could be non-productive, but incredibly useful. You could be going to the bathroom. You could be having a Nerf gun fight, which boosts morale. There's so many other things that those other 2 hours go into. A mature MSP is simply going to say, I want you to hit a certain percentage for your billability. I then want 100% of your day accounted for, and that remaining component that isn't necessarily billable, I just don't want it all to go in a dumpster. When you see MSPs that want 100% time accountability, do give a reasonable billability percentage, somewhere between 70 to 80%, and then they're saying they want the rest of your day entered. The idea here is not supposed to be that you're spending the entire day doing billable work. The idea is that simply, I just don't want you to say those other 2 hours got thrown in the dumpster. I want some idea of where some of it went. Because if 2 hours of the day are being spent taking a shit, that's a waste of everyone's time. That's not cool. And I know that's not what's happening. None of you are doing that. So at my MSP, as an example, we would generally say that you could have up to 1 hour a day of unaccounted for time that went in the dumpster. It was just, listen, I don't know where I was collectively during that hour. I was pooping, I was hanging out, I was talking about, whatever TV show we're watching right now, watching YouTube, I was fucking around. You could have an hour of dumpster time and it would get recorded on your timesheet as what we call Payroll Wrap, literally dumpster time. The rest of that time between the dumpster time and your billable percentage, I don't care, as long as it's useful to the business, just record it. And we had work types for that, meeting, training, things like that. That's not very unreasonable. And if you think it's unreasonable, I would challenge you that nearly every other industry follows this practice, just not with these words. If you have a blue collar union job or work in retail, you have a time card. They expect you to punch in and out explicitly for when you're there. If you've done any sort of your own, scoped work of some type, design, coding, professional services, well, you had job costing. You scoped the hours. You explicitly said which hours you were getting paid for. It's how the modern world works, and it's how it's worked pretty much as far back, at least the time of Hammurabi and getting ripped off for some shitty copper. So this is not a new concept. And I don't think most of you get frustrated at being asked to be accountable for what you are doing. I think most of you get frustrated because it's not clear how to be accountable. And you can tell that your company or your managers don't really understand what they're asking you to do. To wrap it up, inside an MSP, billability does not equal invoiceable. Billability means tracking your cost of goods sold or resellable time. In theory, all of that billable time should be invoiced somewhere. In a normal MSP that isn't fucking stupid, it is. It is invoiced either against an agreement, it is invoiced directly to the customer, it is invoiced to a project scope or a block, or it is invoiced to a digital trash can. Technically speaking, in every PSA you work in, that actually has to happen. You explicitly cannot enter time that is not invoiced against one of those things. It's not possible. So from an accounting standpoint, all of your billable time is invoiced somewhere. As to whether or not the customer gets a piece of paper that says I charged you for these hours, that's a different thing. We go back as a recap to that salad analogy. Whether the salads are free or the salads are $20 or $16 is irrelevant to you for the sake of this. The point is everything that went into making them has to be accounted for and has to get written down in the general ledger, because they will go out of business if I spend $500,000 on salad materials over the year and didn't write it down and have no idea if I charged enough. Everybody gets that, right? And so that is what billability means. Billability does not mean a one-to-one relationship with invoicing the client directly. It does not mean if you're told that you need to be 100% billable, which is a little ridiculous, that means 100% of your time has to result in a customer invoice. If you're being told that and you're not a 1099 contractor, find a new job. Not because your MSP is terrible, because whoever you're working for doesn't understand accounting, which means they're going to run out of money at some point. Then you won't have a job. So I hope you all understand that. Billability is not invoiceability. And if you want to learn about how this all relates to utilization, which is a fucking stupid KPI, I have another video on that you can go watch, because that further confuses this entire situation.